Hello everyone and welcome to Ticker.com news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Key economic events of the week included the latest read on inflation in the US, Eurozone, and in Japan. Investors also digested additional economic data from China and Eurozone. But it was the inflation data and the central bank's actions that dominated investor sentiment. The Federal Reserve, in a unanimous decision, agreed to leave the target rate range for the federal funds unchanged between 5% and 5.25%. The FOMC paused rates for the first time after lifting rates for 10 times in a row since March of last year, and rates were lifted by 500 basis points over the last 15 months. Despite 10 rate hikes in a row over the last 15 months, the economy has been resilient. Labor market conditions are still tight, and inflation is significantly above the Fed's target rate of 2%. Fed Chairman Jerome Powell said in a speech after the rate decision that the full impact of cumulative rate hikes is still not fully felt by the economy. We have been seeing the effects of our policy tightening and demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of the monetary restraint to be realized, especially on inflation, Powell commented in a presentation after the rate decision. The main driver of inflation over the last 2 years has been a surge in crude oil prices. But as the price of energy turned lower, so did inflation. But inflation is now deeply entrenched in the wider economy, and consumer price inflation declined from over 9% a year ago to 4% in May, but core inflation is still hovering over 5%, despite the decline in overall inflation. Wholesale inflation declined in May to 1% from 11% just over a year ago. Turning our attention to Europe, the European Central Bank decided to lift its lending rate for the 8th time in a row and revised its annual inflation outlook and lowered its annual economic growth estimate for 2023. The Governing Council decided to lift the three key interest rates by 25 basis points. The central bank also estimated average annual inflation of 5.4% in 2023 before it cools to 3% in 2024 and 2.2% in 2025. Core inflation excluding food and energy is estimated to average 5.1% in 2023 and 3% in 2024. Economic growth was revised slightly lower to 0.9% in 2023 and to 1.5% in 2024. In other economic news, the trade deficit in the Eurozone shrank to 11.7 billion euros from 34.5 billion euros a year ago. And in economic news in Asia, the wholesale inflation in India turned negative for the second month in a row in May and plunged from a high of 16% a year ago. The latest economic data from China also showed faltering economic recovery that will need more economic stimulus from the government in addition to lower interest rates. Weakening retail sales, fixed assets investments, declining foreign direct investment, and industrial productions signal slower economic recovery in China. We now turn our attention to stock markets around the world. The S&P 500 index extended gains for the 6th week in a row, and the Nasdaq advanced 8th week in a row. The US indices traded at a new 13-month highs, and the European markets hovered near record highs. The Nikkei 225 index in Tokyo closed at a new 33-year high, but indices in China and Hong Kong struggled, but indices in India approached record highs. Moreover, Japanese companies are likely to share more corporate earnings with shareholders through dividends and stock buybacks. We now review individual stocks that were in the news this week. Oracle reported stronger quarterly and annual earnings on cloud services. Luxury stocks in Paris, Milan, and New York continue to scale new highs on the hopes of China recovery and stimulus, and the energy company Shell plc announced its plan to return more capital to stockholders. The Nasdaq exchange operator accelerated its pivots to financial technology with a new acquisition, and Adobe reiterated its positive outlook for the quarter end 2023. The event organizer Informer jumped after the event company lifted its outlook, and homebuilder Lennar revised higher its home sales outlook despite the market headwinds. On the downside, John Wiley & Sons announced a restructuring plan. The video game retailer GameStop remained in headlines after the company fired its chief executive. Illumina forced out its chief after pressured by an activist investor, and Logitech chief executive resigned to take a job somewhere else. Zions Bancorp was in focus on net interest margin worries. Looking at the next week, investors are awaiting the U.S. housing market data and interest rate decisions in the UK, China, Brazil, Norway, and Turkey. In addition, inflation data is also awaited from Japan and South Africa. We will see you next week.